Aloha and welcome to Java. Thank you all for being here and joining me. This is for Tuesday, February 6th, 2024. Again, we've got a lot to go over, so we'll start right in with the MMRI, our favorite risk indicator, showing that we are still increasing risk, although a bit slower than yesterday. Yesterday did play out the volatile markets that we were kind of thinking that it would do, had high probability of doing so. So again, today we are looking at stocks kind of under a bit of pressure. We're looking at the volatility index is still elevated. We've got the relative strength of the dollar still kind of maintaining its hold. The futures are in the red. So with all of this, it's putting a bit of pressure on the stock market. The sentiment is cautious, but we're still in the greed zone, meaning basically people are still looking to buy the dip. There's no imminent danger right here that it's showing at the moment. We do have some Fed presidents from the Federal Reserve talking today, so we'll go into that. So, with our calendar, today we're expecting none other than Loretta Mester will be speaking at noon. So we know that the Fed speakers can move the markets depending on how they frame how things are going moving forward. So we'll watch them. We've also got the 3-year note auction coming out. Investors have been dumping bonds. That made the yield spike yesterday, kind of a fear kick trade into the dollar. That put pressure on stocks. We're also getting the weekly crude oil stock, and then Neil Kashkari will be speaking at 1 o'clock. So we have a couple of things happening prior to market open on Wednesday. So I've got that calendar here as well. Mostly trade, imports, exports, but that does kind of give us a better view of how the real economy is doing, not just in the United States, but globally. So we'll go over a bit of that later as well. So we've got our earnings that are coming out prior to market open. Watching Toyota, I think they're a bit strong. And then on the other side, we've got Ford, which I expect to be weak with what's going on. And we'll have a little more about that in just a bit. So going into the markets, as we said yesterday, that bond market sell-off on the higher for longer made the yield spike. And as this says, the worst day of losses for quite some time now. So going a little bit into the energy sector, we have the current US administration did a ban on liquid natural gas, talking about how it's dangerous for the industry's future. Well, this is a load of garbage, in my personal opinion. They are talking about the gas export terminals. So I want to show you a chart here. And then I'm also going to include a direct link to this because you can kind of manipulate this. So what I've got this going to right now, I believe I did since 1940 to current time. This is energy use by source. So traditional biomass, this is coal, which is considered one of the dirtiest energies. Oil, the purple is natural gas. So this it's one of the larger ones. And then we've got nuclear and then your green energies up here. But my point in this is that cutting natural gases, basically shooting yourself in the foot, not going to happen. So just don't pay attention to that. I am bullish liquid natural gas in the long term. I'm waiting a bit to go in for the charts to kind of show a bit of a setup around that too. Anyway, long term, but it's also nicknamed the Widowmaker for a reason. So caution on that trade. Also, not financial advice. That's just what I'm doing. So, a bit about the banks. UBS took over Credit Suisse some time back when they had major shakeup issue. So now this is just to show how crazy these stories are coming out now and what the mainstream media is doing. So they report quarterly loss on their earnings. This is talking about how they beat their earnings expectations and announcing a share buyback. They had a quarterly loss. They're hemorrhaging money from this Credit Suisse deal. So what they're doing is a kind of cherry picking. After the third quarter report, the market chose to focus on the bank's strong underlying operating profit before tax, which was well ahead of expectations for the fourth quarter. So, not talking about their loss, and they are talking about, however, um, that they will be cutting around 3,000 jobs as part of a wider restructure. So, because they're cutting jobs again, doing this restructure, they're looking to get longer term profitable, even though they're still in trouble, they said, for a few years to come to recover from taking over Credit Suisse. So, moving forward a bit to housing and real estate, we had a housing affordability study, and this is saying that nearly half of all renters in the United States are paying over 30% of their income toward rent and utilities. So, most of them are paying over 50%. And this is the new bracket basically for what's considered lower income, $30,000 to $74,000 per year. Wasn't long ago, if you're making $74,000, you're actually doing pretty well. So with commercial real estate, we've got office values basically dropping, and they're talking about this asset managers getting more into trouble, the ones that are holding commercial real estate notes. So not just banks, but asset managers. This also goes into the pension funds and the larger players. So had other news, this talking about chip makers, because this is a huge sector right now among the AI, artificial intelligence. So, chip makers are warning of weakness in the industrial and wireless segments. Specifically, what they're talking about is for vehicles, and we'll go into that a little more in a bit, and the lower end chips for industrial use. But these support a lot of the things that use also the artificial intelligence. So I think we're still floating on kind of a high with that. So moving on to the real economy, we're jumping across the pond, so to speak, for a bit. January, 36.9% manufacturing companies reported lack of orders in Germany. So it's increasing from October, talking about from a survey. So the trade, the production, manufacturing production going down. Talking about their German trade gap with China is narrowing for the first time in years. So their trade is down, but China's is lower. So this is just an indication for global trade again. And we've got Lindner talking about Germany's lack of growth making their country poor. So basically, their lack of growth is not keeping up, their GDP is not keeping up with their costs and their needs. So, as I said, I wanted to get back into the auto industry for a bit. This is a stock ticker for Stellantis Auto Group. They've got a lot of things going on. So, Ford in particular, their numbers are getting crushed. They are now warning the head company that they are at a near halt with sales. So the Mustang Mach-E and F-150 Lightning, so basically their electric truck, their production is halting because sales are halting. They're planning on laying off 9,700 workers, and this made their stocks drop. No surprise there. So we've got GM recalling over 300,000 trucks to fix a tailgate issue. So they're saying that this is temporary, that they're not going to be producing temporarily and temporarily laying off. But we've kind of heard that word before, and we know it means something else to them. So I do want to bring up this would not be buying in. It's a short at the moment. I expect them to go down farther for me, not financial advice again. You have to make your own decisions. But Toyota is getting into hybrids, and that's kind of what people are looking forward to, a little more long term. So, with that little more news, we've got Nayib Bukele. This is for Salvador. He won the presidential election again by a landslide. So it's just showing his cleanup of crime. I've kind of spoke about this before. He is now like a model for Central America to kind of crack down on what's going on there. So, a couple of lava updates. This one caught my interest. So we've got Greyhound. They're closing 33 stations in the US. And it's because they are leasing these terminals and the rents are getting too expensive for their business model. So come to find out, these terminals are owned by same major corporation, Alden Global Capital. So Alden Global Capital has raised the rent on this Greyhound. So Greyhound has to look for other stations to operate. But this is the same company that have purchased the Chicago Tribune as well as the Orlando Sentinel. So as soon as they purchased these publication companies, they cut staff and changed the budget. So they are controlling transport, major form of transport, and then also the news, basically. So that caught my attention. We've also got on the ongoing, basically, protests, Spanish have joined in. So there's a lot more going on over there now, and it's growing across all of Europe. With that, they just renegotiated uh, food prices between the producers and the retailers, and they're saying that they're expecting a rise 2 to 3% on average in their food. We'll see how this actually translates into the real world. So, with that, I want to wish you all a green trading day. Just a wonderful day in general. Thank you again for joining me. Until I see you again, my friends, stay free.